Hi, I'm Greg Heym, Chief Economist at Halstead Property, and welcome to Behind the Numbers, where each quarter we take a look at the Manhattan residential market. Today we'll be discussing our second quarter 2009 market report, which marks our one-year anniversary of the show, which is now filmed in widescreen. We're coming to you today from this beautiful townhouse at 28 Grove Street. This four-story townhouse with an elevator and a basement also contains a beautiful extended garden. It is located on a spectacular tree-lined street in the heart of the West Village. The Manhattan real estate market continued to show the effects of the recession during the second quarter. There were just under 1,400 sales reported, 53% fewer than during the second quarter of 2008. Prices also declined in the second quarter. The average apartment price of $1.26 million was 24% below the level of the second quarter of 2008. A good part of this was due to the many closings at 15 Central Park West and the Plaza, and if we remove these buildings, the decline would just be 15%. The median price, which measures the middle of the market, fell 19% over the past year to $795,000. This is its lowest level since the second quarter of 2007. Price declines during the quarter were greater for co-op apartments than condominiums. The average co-op price fell 29% over the past year, due in large part to an 82% decline in co-op closings of over $10 million. The average sales price for condominiums fell 18% over the past year. This was due mostly to the sales at 15 Central Park West and the Plaza a year ago. If we took these two buildings out of the number, the figure would be just down 2%. Apartments sold during the second quarter spent an average of 129 days on the market. That's 48% longer than a year ago. Sellers received 92.6% of their final asking price. That's down 5% from a year ago. The steep decline in high-end co-op sales was most reflected in the East Side market, where the average price per room for both pre-war and post-war cooperative apartments fell sharply. Condo prices fared better as there were many new development closings. On the West Side, the average price per square foot for condominium apartments fell sharply from an inflated figure a year ago caused by closings at 15 Central Park West. The decline in average price per room for co-op apartments was much less. As we check out the view on Grove Street, it's a good time to discuss the downtown residential market. The average condo price per square foot fell just 2% in the downtown market over the past year, due in large part to almost two-thirds of the closings being in new developments. Co-op prices fell at a steeper pace. In the northern Manhattan market, a lack of new development activity caused a dramatic drop in the average price per square foot for condominiums. For co-ops, the average price per room fell slightly for pre-war apartments, but actually rose for post-wars. During the second quarter, we saw a few signs of improvement in the economy. Most notably, the pace of job loss nationally began to slow. We also saw the stock market rise over 30%, and confidence returned to levels that we hadn't seen since the collapse of Lehman Brothers. In New York City, the job losses so far have turned out to be less than originally forecast. The city's unemployment rate remains below that of the nation's as well. We are honored this quarter on the program to have with us a very special guest. I'd like to welcome Diane Ramirez, President of Halstead Property.
Hi, Greg. How are you?
Hi, Diane.
I want to share some exciting news at Halstead Property.
Sure, go ahead.
We are the first metropolitan New York firm to expand into Fairfield County. We recently acquired Wheeler Real Estate and agents from Country Living. With this acquisition, we now have 200 talented agents in Fairfield County in 7 Halstead offices: Greenwich, Stamford, Darien, Rowayton, New Canaan, Westport, and Wilton. We would also like to announce that we recently successfully recruited 27 professional agents from the firm formerly known as Coldwell Banker Hunt Kennedy. And we're thrilled to welcome all of these new agents to the Halstead Property family. As one of the top Manhattan residential real estate firms, Halstead is proud to be the only major New York firm to have a presence in 3 states, with nearly 900 agents throughout 19 prime retail storefront offices in Manhattan, Brooklyn, Riverdale, Hudson Valley, Metro New Jersey, and Fairfield County, Connecticut. We invite you to learn more at halstead.com. And finally, since I'm such a big fan of your Ask the Economist section of the show, I thought I would ask the question.
Sure, go ahead.
Our agents are incredibly busy with new deals. When are these new deals going to translate into your market reports?
Well, as you know, Diane, it can take several weeks to go from a contract signing to a closing. Especially in Manhattan, where we have so many co-ops, it can even translate into 3 to 6 months. So I would expect to see the impact of everything that's accelerated over the past couple of weeks in the third and fourth quarter reports. Remember, if you have a question, please email it to behindthenumbers@halstead.com. Be sure to include your name and neighborhood. Well, that's it for our second quarter 2009 Behind the Numbers show. You can also view our videos on our corporate Facebook page by searching Halstead Property. That's our show. Thanks for watching, and we'll see you next quarter.